So I'm going to be looking down at my notes. My apologies for not necessarily keeping eye contact. I probably haven't done a semi-public speaking gig in 20 years, so I'm a little rusty. Basically what I'm planning on covering is very basic nuts and bolts. I'm happy to get into details if we have time, but we may not. We might do a part 2 at some point. Just very basic nuts and bolts of bookkeeping in general, since I'm assuming we have sort of a broad level of interest here. I'll be using Quicken 2003 for Windows. I'm a slow adopter, as they say. It works fine on Windows 10. And I'll dip into some particulars about business bookkeeping per se, but my overall umbrella here is just bookkeeping in general. As well as, there's also some business issues here, because if you're a bookkeeper, you're a consultant. Or if you're looking to hire a bookkeeper, you're the client. I'll also touch on a few things about what you should look for if you're hiring a bookkeeper, or if you're looking to do bookkeeping, what you might look for in a client. It's very parallel to what we probably all do as consultants. Also made a note of a few red flags to look for on both sides. So my general goal is different perspectives, and I may float around in my language, so my apologies if I'm confusing. Please feel free to ask me. Doing your own personal or business bookkeeping, hiring someone to do either of those for you, or if you might want to do bookkeeping, volunteer or paid, there's some perspective here you might get as well. I'm not planning on getting into a lot of advanced bookkeeping issues, again, if we have time. And although I'm not a tax expert, I've both from my own bookkeeping and from talking to clients, accountants, I picked up a few tax perspectives. I wasn't planning to get into a lot of that, but there are sort of common tax questions people sometimes have for the bookkeeper, and most of them are basically, the answers usually are, sorry, that's not deductible. In fact, I even thought about starting a newsletter with that as the exact title, sorry, comma, not deductible. So anyway, so feel free to ask. I may defer depending on the time we have. I'm going to try to finish by 8:15, 8:30, so we have plenty of time for questions, but I may have to accelerate through parts of my talk. And a lot of the bookkeeping terminology is a little interrelated, self-referential, chicken and egg. So bear with me. I tried to, as an engineer, to put this in an order that every term is defined before I start using it, but I just gave up.
Hey, Mark, just so you can plan, I think what we'll do is we'll do our break at 7:45.
Okay.
And it'll just be we can stop wherever you are. We'll just pause, save your state.
Yep.
Go into hibernate mode, and then we'll come back in 5 minutes.
Okay. Can you give me a 5-minute warning on that?
I will.
Thanks. My overall thought here, and I'm not going to stick to it strictly, is to do the sort of what, why, where, how, perspective. So my definition, if we want, I start with what is bookkeeping? What do people mean by that phrase? I have my own, I'm self-taught, by the way. I read a book on bookkeeping years ago, but it was all debit, credit, and paper-based. So I gleaned from that interesting stuff. But my basic definition of bookkeeping is what they call cash flow, tracking cash flow. Money in, money out, money hopefully that will come in, money that will probably go out. Now, those are the basic 4 elements of cash flow for my money, So money coming in usually includes, income you've earned, refunds or rebates, reimbursements, gifts you may receive. Money going out typically are expenses or gifts you're giving, or fees you're paying. Money you expect to come in the business world, we call that receivables. I did this work for this client, I sent an invoice, I am hoping to get paid. You may have money you've loaned out, so you're expecting interest or maybe principal back. And you may have pending refunds and reimbursements for things that you were overcharged or whatever. The least common thing I ever see in bookkeeping, and no one's ever asked me to do this, is money you expect to spend. We call that payables. If a vendor has billed you, but you haven't paid them yet, or you've got expenses coming up, maybe it's a subscription or whatever. And then in terms of the bookkeeping I'll be showing you, there's another element, which is money that transfers from one of your accounts to another, which is technically net zero on your cash flow. It didn't go out, it didn't come in, it just moved from one pocket to another. And it's one of the more confusing aspects of bookkeeping. So I'll try to keep that to a minimum for the moment. So that's cash flow. What came in, what went out, what might come in, what might go out, and then money you move from one pocket to another. So I generally use a very sort of engineer approach. And I use my own experience with my own bookkeeping to kind of inform what I do for clients. But I also, with most clients, try to say, you know, do I have permission to ask your accountant about stuff that I'm not sure how to handle for you? And sometimes they say, sure, go for it. Don't bother me again. And other times they say, well, I don't want you to talk to my accountant, but give me the question and I'll ask and get the answer and feed it to you, which can turn into a game of telephone sometimes. Just also briefly, many bookkeepers do more than I do, but I don't do certain things like paying bills for the client. I don't want any liability about what did or didn't get paid or whatever. I don't want to be a signatory on their bank accounts. Some bookkeepers, you know, and more and more I'm saying pre-COVID, prep paper checks for the client to sign to pay various bills. I don't do that. Like I said, I don't tend to keep track of receivables or money owed in unless it was something that I posted in their bookkeeping and then we later figured out they were overcharged. So I'll make a note about that, but I don't do receivables in general. Some contractors or other folks do estimates as well as invoices. I don't get involved in that. I've learned my lesson to never, ever get involved in payroll ever again. Payroll is insanely complicated, not just the tax part of it, but many other parts. So I beg clients to sign up with payroll services, and thankfully most do. And then I just notice the debits the payroll service charged them, and defer to the payroll service for all kinds of questions. It is a time sink and a horrible thing to get involved in, the details of. I also don't tend to work with product businesses. All my bookkeeping clients just happen to be service businesses. And one day I realized I really like that. It's much simpler than product businesses. I once ran across someone who, long story, brought up the idea of like monitoring their finances daily. I think it was a coach advising one of my clients who was miffed, startled, dismayed that I wasn't monitoring my client's finances daily like her bookkeeper monitored her finances. And I did my best to bite my tongue because the client was on the phone with us at how ridiculous that sounded to me. I do my darndest to be ethical and have a lot of integrity, so I don't fudge things for clients, ignoring tax things that I understand, making stuff up, for example, a parking ticket or a speeding ticket. Those are government fines. By definition in the tax code, if you Google it, they're not deductible. So if somebody tells me, here's a parking ticket, but pretend it was a garage, like it was parking, I tell them, no, I'm putting it under personal expense because it's not deductible. And if they push back, then I'll relent, but I'll make a note in the memo, a little passive aggressive, I suppose. Parking ticket, client told me to put under parking. That way, in theory, if the accountant sees that, they might catch it. And if they're audited, the auditor will see that. But I'm not going to drop a dime into the IRS. So I don't like to get into things that are just wrong, if I can help it. People often get confusing bookkeeping and accounting. It's a large story, but basically, accounting is like bookkeeping plus a lot more. Accountants keep track of stuff like depreciation on your equipment. They sometimes want to look at cash versus accrual, which is a whole larger question. Owner equity, what have you invested in your business, and all kinds of other tax stuff. I'm vaguely aware of that stuff, but I like just cash flow. I don't sign the tax return, and I'm really happy about that. And some people have both an accountant and a bookkeeper. The bookkeeper is generally less expensive and more focused on the cash flow and in a sense, the long term is prepping stuff for the accountant. And the accountant is often working at a higher level, like tax planning, tax preparation, filing. And it's kind of expensive to pay an accountant to do your bookkeeping unless they have tiers of employees. I just had a quick thing. If you're already doing some bookkeeping, if you're going to ask me a question, let me know if you bring it up, what you're using. In general, I like Quicken because it's simpler, although the standard is QuickBooks. And that's another long story. I've learned no longer to tell the accountant that I'm using Quicken because they'll just give me a lecture about QuickBooks. And I tend to give them the client reports in PDF form. So they can't tell what it came from unless they're familiar with Quicken. Saves all kinds of arguments. Another difference is there's some difference in terminology between things like Quicken and things like QuickBooks or other systems. I'm just going to go with the Quicken terminology, which I'll do my best to explain, because I'm a big believer in the right language for the job as well as the right tool for the job. So if you're in a different platform, feel free to ask me, how does that translate to my world? And I'll try to answer. Also, I do use Excel as a secondary tool, but I don't recommend it for serious bookkeeping because it's just way too unstructured. Quicken is very focused on the job at hand, and you can bend it to other uses. You can kind of use it as a spreadsheet, but that's super clumsy. But I've been there. So briefly, people often say, well, why should I bother with bookkeeping? And on a philosophical level, which is really Adam's bailiwick, I've only really come up with two broad motivations: getting organized for taxes, and what I call curiosity. I actually try to structure the so-called categories in Quicken for myself and for clients pretty much around IRS concepts, supplies, parking, that sort of thing. And that dovetails really nicely with accountants, the perspective an accountant will have when they do your taxes. And then other stuff that may not be related to the taxes. On the curiosity front, for this is a very broad umbrella in my mind. The ability to get some questions answered that might matter to you. What's your income? What are your expenses? What's the net of those two? Income minus expenses. Also, historical record. When and where did you buy that computer or printer or pencil? If you kept track at that level. What did you pay for this or that service? Has this client paid you yet? If so, or what's their history in paying you? There's all kinds of terrific things once you have good records that you can, in a sense, questions you can ask and answer. So taxes and curiosity, those are my core motivations for bookkeeping. I'll skip the stories about how I got started in bookkeeping. Let's just say, for myself, I was motivated personally long before I ever had a business. When I started my business as a sole proprietor, I naturally just expanded it to do my own bookkeeping. And when I incorporated, that was only a minor change to my bookkeeping. And then about a few months after I started my business, I went in to talk to a client about teaching his person how to do the client's bookkeeping. And it quickly transmogrified into, can you just do this bookkeeping for me? She's really busy processing all my other stuff. And I was like, sure, why not? And he liked my work, started referring me to his colleagues. And thus my kind of, side practice was born. And that client is actually still a client today. And the ripples in the pond from his referrals are other bookkeeping clients of mine. Not all, but many of them. I don't market my bookkeeping services because I like to focus on the computer stuff, and I have plenty of bookkeeping work. I don't need more. Am I talking too fast, or is this going okay? You can do a thumbs up if you okay. Feel free to speak up if I'm going too fast. I tend to do that when I get excited about stuff, and I love this stuff. I'm reminded of a Monty Python skit about why accounting is not boring. But this is bookkeeping, so it's much more interesting. So briefly, what to look for when you're hiring a bookkeeper. It's basically not that different from hiring any other vendor. Experience doing the job. In this case, you could even say experience doing their own bookkeeping. Ideally, experience doing bookkeeping in your kind of business. Like Kimberly, it may not be, I know how to do bookkeeping for someone who's helping people restart under COVID, but a self-employed sole consultant, maybe off in the wilds of New Hampshire, working remotely. That's a pretty, that's not an uncommon thing these days. Versus a product person or someone who works with, Raytheon, that doesn't fit you. So, look for that sort of thing. Hopefully a decent knowledge of tax concepts. It's okay to test them if you already have a little bit of tax knowledge from talking to your accountant. I don't think it hurts to say, can I deduct parking tickets? And if they say, absolutely, it's like, ugh, find somebody else. Willing to talk to your accountant and coordinate with them. Integrity, confidentiality. Someone who's not shy to ask you questions. I'm very pushy about questions. Someone has clear pricing. There's a big debate, as Nadine will tell you, in the bookkeeping world about, do you charge hourly? Do you do fixed price? Do you do value, percentages? Also, do you pay them after they finish the work? Do you pay them in advance? Or do you make a deposit or retainer, just like any other consultant? Do they have room for you in their schedule? I probably don't. But I'm happy to refer you to folks like Nadine, who are fantastic. Can they work with the source material that you're providing with them and talk about that? What do you have to give them, and is it enough? Enough detail, enough frequency, whatever. Do you want to give them online access to your bank and credit card accounts? Maybe not at first. Maybe that's just the way you are. Delegate, delegate. And they can produce the results you want. I mean, you got to think about what's your goal? What do you want from the bookkeeper? And believe me, your perspective will change once you start working with one. Do you want them to warn you if your balances are running low, or if you're incurring fees, bounce checks, that sort of thing? And of course, references. You don't want to be somebody's first client. So, and flip side, in my experience, what I look for in a bookkeeping client, for the few times I take on a new person, number one, do they see bookkeeping as a valuable service, not an annoying, overly detailed, irrelevant, and obsessive waste of time? That's a hard question to ask, but it often comes out. I had a client once say to me, so what, after we started, and I never thought to explain this, what do you do versus my accountant? Well, guess what? By the end of that period, he fired me, because after I finished that year, he just didn't like at least my approach. And, via con Dios, better to be rid of him as a client. Someone who understands that it's far more than simple data entry. I'm not a monkey typing in numbers, going down a column in a spreadsheet. Yes, there's data entry involved, but there's far more than that. I use my experience, my knowledge, my integrity, my own curiosity, your best interest at heart to get stuff properly entered and tracked. Is that client willing to give me the information that I need? Are they available? Are they willing to help me document their deposits when they deposit 5 checks together? I got to break that down, because some of those checks might be, gift from grandma and longstanding client. Well, I don't want grandma's gift to be taxable to you. That's a personal thing. So some things are often vague and unclear. Are they willing to talk to you about questions? And that's a hard thing to explain for some people who are just sprinting and don't want to talk to you for more than 3 minutes. This conversation, by the way, takes about an hour and a half, I found. They understand that my bill will vary. August might be a lighter month. December might be a really busy month. My bill will vary because I charge by the hour. And just because one month is lighter it's funny I have to say this, is no promise that I have now reached some sort of plateau and every future month will be that low a bill. Not going to happen. Is the client willing to do stuff to make my job easier, and I also lower their bill? Write coherent memos on their checks. So I don't have to ask them, who's Joe Smith and why'd you pay him $100? But if they don't, I'll be asking. And understands that there will always be questions. Every time I do the bookkeeping, forever. I may learn lots of things about what they do, but there's always something new, and there will always be questions. It's not a fast process, but I try to be thorough and diligent. If somebody expects me to do the bookkeeping in 1 hour and be done tomorrow, it's not likely. And if their previous experience is some kid who charged $10 an hour, well, that's not me. I'm a professional running a business, and you get quality work from me. I'm not the kidder on the corner who you've had every summer until he went off, damn it, to college. How do I reach the client, for questions or other things, by phone, email, cloud storage. And by the way, sometimes that choice they tell you 8 months later may be different. With COVID, I'm asking that question again, because I used to go be in person and hand them a piece of paper. Hey, here are the questions. Scribble your answers on the right-hand side when you have time. Your assistant will scan and get it back to me. Well, that ain't happening now because the assistant might be in Worcester and they're in Boston. So revisit that conversation. And willingness to permit me to contact their accountant directly or indirectly, because I'm going to have questions, and I'm going to have questions right up front, because if I'm doing end of year reports, I want to know how to get them to the accountant. I want to know how the accountant handles certain things that I'm not going to get into today that affect what I do. Okay, hope I'm not going too fast, but I think we're on schedule. So quick bird's eye view of the bookkeeping process. There's a one-time setup. I talked to the client about the scope, which I'll get into, and then I create the quicken file and do some one-time setup. And then each round of bookkeeping, I gather what we might call the source data. I get it entered, either manually or by downloading. I reconcile each account if I can. Run questions by the accountant, by the client. Run off the reports the client wants, get them to the client. Back up my data. In fact, I back up multiple times while I'm working. Obviously, send an invoice, and then do other maintenance as appropriate. You know, backing up my stuff. Maybe the client wants a copy of the file on their computer. It's not rocket science. So a brief sprint through what does it cost the client for the bookkeeping. Typically, you know, the simple things are, you know, the cost of the software. I don't give it away. I don't steal it. Although with Quicken 2003, that I might just make a copy of. Intuit has moved on many decades ago. My costs, which in my case is hourly. And clients will ask me for an estimate and I'll give them a range, but I say it's really just a guess. And they will remember the smallest number I said, so be careful about giving ranges. And of course, the ongoing time and effort beyond those things, you know, to, you know, get the questions answered, deal with other stuff, finish the previous year, etc. So that's the cost. The benefits of bookkeeping, apart from what I've already mentioned, are the key thing that is visible are the reports. You know, a cash flow report, a detailed report. Some clients like to see this year compared to last year, assuming I've had them that long. And another just time-saving benefit is the software does all the arithmetic. It's great. I used to do pencil and paper stuff for myself. Lots of work, and you make one little mistake, and you got to go back and do it all again. You know, so the software does the arithmetic. They're running balances. It adds stuff up. Reconciliation can be really straightforward. I've never had to put in one of those adjustments. You can search, you can sort. And ideally, if the client lets you do bookkeeping a reasonable frequency, come end of year, you do the last period and you're done. You're not doing the whole damn thing on the last week in December. And like I said, the historical record, you know, where did I buy that printer? How long have I had that employee? And better able to stand up to a tax audit. The auditor might still want to see paper backup, but when, you know, I've been told that, you know, when they see my bookkeeping in place, they usually sail through that part of the audit. I have a couple of very brief things to say, and then I'm going to actually get into a live demonstration. A couple of just brief bookkeeping horror stories to put this in a little bit of context, and a couple of success stories. Many years ago, a colleague told me about taking over from bookkeeping from a previous bookkeeper, and was horrified to discover that that previous bookkeeper entered every deposit like it was taxable income, and every expense as if it was a deductible business expense. And of course, some of those were discovered to be not the case, but they just blindly treated everything like that. And another colleague told me about, again, taking over a previous bookkeeper who only tracked the client's payments to pay off her credit cards, and broke down that payment into, you know, expenses. But it turned out that those payments weren't paying, you know, by the client's choice, were not paying off the entire credit card bill. And this bookkeeper didn't bother to track the rest of the stuff that had been charged on the credit card, but that wasn't being paid off. So the client was basically missing out on the tracking and deducting of thousands of dollars of expenses every month. On top of that, the client was mad at my colleague, you know, A, for bursting the bubble about this beloved retired bookkeeper, you know, just, you know, pointing out that this was, in a kind way, substandard work, and was, you know, mad for daring to suggest that she be paid to fix it. That's like, well, why would you do that for free? So, and on the success side, I've already mentioned one client where, after he started with me as the bookkeeper, he got audited a year or two later, and at least what I had done for him sailed through the audit. Another client told me that at the end of the first year, when I had started to do his bookkeeping, and he brought my reports to his accountant, the accountant was floored that it wasn't the long-standing, you know, shoebox full of receipts, and presumably was happier and it cost less to prep his taxes that year. So, you know, so some of the, you know, horrible things that can happen. So part of the lesson there is to encourage your bookkeeper to tell you what's going on, what they're discovering, good or bad, and hopefully respect what they're telling you, because they probably know what to do about it as well. Oh, quick question. Somebody asked, Kim asked if I ever use contracts. Yeah, I should, but I don't. I've been thinking about it over the past few years, and my attorney way back when was, justifiably frightened for me because of stuff that might go wrong. But I've been a little head in the sand about it. But yes, there's all kinds of stuff that could go wrong that I'm probably not protected about.
Martin, can I ask you a related question?
Sure.
Do you have insurance? Is that part of your package?
Well, yes. Years ago I got liability insurance, and I was startled. And I can't tell you whether it's E&O or general liability off the top of my head, but I was startled when the terms of it included coverage for all prior years I'd been in business, long before I ever talked to the insurance company. And of course I said, where do I sign? Because for all I know, someone might come out of the woodwork from 5-10 years ago. Now, just to be clear, liability insurance, I think the concept of it is stuff that you didn't intend to happen, as opposed to stuff you intentionally did. Like if I punch you in the mouth, that's not liability. But if you trip over, a loose carpet that I wasn't aware of in my house, that presumably is covered. But God help you try to get a liability insurance company to tell you exactly where the line is between those two things. So long story, but yes, you should definitely be talking to your attorney, your insurance person, and other things for any services you're doing. So does that answer for now?
Yes, thank you.
Okay, yeah, there's lots more we can talk about on the business side of that. Okay, so I'm going to share my screen here. Now, the ironies of screen sharing are that a second, did that.
Make a quick comment about that, Martin?
Sure.
Folks who are watching this on Zoom, you'll notice at the top of your screen where it says you're viewing Martin's screen in green, to the right is a tab called View Options. If you click that tab, you'll see an option called Zoom Ratio. And if you go to Zoom Ratio, you can change the percentage of Martin's screen to your liking. So I like 200%. Now what will happen is it will be bigger than fits the screen. So you'll get a cute little hand that lets you move the screen around. But you'll find it much easier to see what Martin's doing if you use that feature.
You can also turn off the side-by-side option. You can also go to full screen mode. There's a number of things that will enlarge what I'm showing you, but with Adam's help, I figured out a lower resolution for my monitor. So quick question, can everybody make out the text in the, these file names where you see the word BNUG? Okay, if anyone can't, tell me now, because I can always lower the resolution farther. And the two programs I'm using nicely seem to roll with resolution changes, which is nice to see, being as a former software engineer. This is the folder of stuff where I've prepared to show you, but I'm going to actually start with some very simple nuts and bolts. So here we are in Quicken with nothing open. So I'm going to take you through a few just simple bookkeeping things. I'm going to make a new file, and then we're going to talk about categories and accounts and other, bookkeeping concepts here.
Is there some difference between Quicken Deluxe and some other kind of Quicken?
Well, it's evolved over the years. I think back then, anyway, the Deluxe also included invoicing and stuff, or maybe investment accounts. I generally just roll with whatever was appropriate. It's complicated over the years. And the Macintosh version is not comparable to the Windows version. It gets really complicated really fast. At one point, they had like 5 or 6 flavors of Quicken at any one time. Home and business, pro, accountant, ultimate. It's like versions of Windows. So the key thing to look for is free trial, and do you need comparison columns, and do you need what goes off to the right? So that's a very large topic. This is where I happened to land, back in, actually I liked Quicken 2001 even better than 2003, but we're not going to get into that. So basically, like many programs, when you have nothing open, the menu bar is more limited. And so here's how you make a new Quicken file. You hit New, you pick your folder, you type in the name. Now what you're going to see here is it's actually going to turn the name into a capitalized thing. But in general, I use name of client and the word finances. Some people like to use the word bookkeeping. And I generally make a separate folder for each client because there's often other stuff that goes in that folder. So, poof, we now have a new Quicken file. I'm going to close this guided setup because it's just kind of ridiculous. So I don't use any of this stuff. So I'm not going to get into exactly what it is. This is kind of like a dashboard or a bird's eye view. I find this all a waste of time. The basic layout of the screen is like an email program with mailboxes and messages. Down the left-hand side, there will be accounts like bank, credit card, cash. And when you select one, the right-hand side will display the transactions in that account, just like mailboxes and messages. So at first glance, you might think this file is empty because there's no accounts. But ironically, in the category, they dump in a whole bunch. There's some versions of Quicken that ask you, do you want our standard categories or don't you? And while these are mildly interesting, I find them, I mostly delete these as I go. So, so one of the downsides of this version of Quicken, future ones may have changed, is that it dumps all these categories on you, which I mostly delete and start from scratch. So rather than demonstrating all that, in the grand style of Julia Child, I'm going to reach into the stove and pull out a file that's just, oops, pardon me. If you all heard that, that's the Quicken opening a file sound. You can turn the sounds off. So here's that exact same file. Oops, pardon me. Don't watch, I didn't mean to have this in here. So this is an empty, a mostly empty file, an empty file now where I've deleted all the categories. A Quicken file is basically all the data. It's like a database. I make a separate one for each client. Oh, by the way, they're not designed for simultaneous multi-user access on a network or via Dropbox. Don't do that. You may well corrupt your file. If you want to share a Quicken file with somebody, you got to pass the baton and get it back. So the first thing I do is I set a password. This is probably not military grade encryption, but at least keeps your nephew, anybody who's sitting in front of your computer, out of your file. There is no old password. I'm just going to type BNUG in lowercase here, which of course you can't see. Oops, I think I may have already put BNUG in there. So my apologies. So this is how you make the password. I think I've already done it. I think. Pardon me. Yeah, sorry. I've already set the password, but yeah, I just set BNUG, but it's right here in the file menu. You file, passwords, and you set a file level password, not a transaction level password. I'm not going to get into the different kinds of passwords at this moment. Okay, so we're going to start now by doing the next logical thing, which is making a new account. And like many programs, there's 8 ways to do the same thing. These days, I tend to reach over here and just right-click and then hit Add New Account. I believe it's, yeah, if you go up here to Account Lists, you know, and you get this empty list, you can click Add Account here. However you find it, you end up in this dialog. And as you can see, Quicken channels all kinds of accounts. For our purposes, these are the 4 I'm going to focus on. I've only occasionally used one of these other types for clients, and I never get involved in clients' investments. They never even ask me. So these are the 4 main types. So checking is the most familiar type. So you pick the type of account, and then you give it a name. So I'm just going to put citizens here. No endorsement intended. Now Quicken has all kinds of ability to download stuff. Oh, this is interesting. The pop-up menu here is showing up on my other monitor. That's weird. This is showing a list of banks that were hot in 2003 for Quicken to download from. when I download stuff, I don't do it from within Quicken, which is a complicated thing. So I just generally just type NA in this box. And I know what this is, so I don't have to put a description here, but if you want to document more, that's fine. I usually just add adjectives to the account name. And then it asks again, don't you want to use one of our banks? And I just hit, nope, use the name that I entered, which is basically nothing. And then it asks a couple more questions. How far back is this account starting? And what balance did the account have as of that date? So just for the moment, I'm just going to put January 1st and just leave it at 0. But normally you'd be pulling on a statement and doing something more real here. And by the way, only business accounts tend to run exactly matching the month. Most accounts start from sometime in the middle of the month and they end at sometime in the middle of the month. So one of the important things to ask the client or ask yourself is how far back when am I going to start the bookkeeping? And typically the answer is back to January 1st of this year or starting January 1st of next year. So you got to find the statement that at least straddles January 1st. It might go back to like December 15th. And so what you enter here would be like December 15th of 19, and then you type in the ending balance on that day. That gets you off to a really good start, which means you'll be doing a little bit of December, but you want to be able to reconcile stuff. So that's another tip here. And in oh, actually, I apologize. I actually have this written down in my demo notes. So actually, we are going to do this. My apologies, I didn't turn the page. So for my little demo, here's what I'm doing. I'm pretending that the account in question has a statement ending December 23rd, because the next statement will straddle January 1st, and that was the ending balance as of that date. And if you don't know this, you can always adjust this later. And then poof, here we go. We have one account, and here is what's in that account. Oh, and I'm going to turn this stuff off at the bottom because we're not going to get into even trying to, Quicken can also pay bills. We're not going to go there. So I'm just going to turn off this panel, which gives us more room to scroll. So this is the first, we now have a transaction. And you can adjust this or add notes to it if you want. Are people with me so far? I'm going to do this again for a credit card account in a moment, but catch up here in my notes. So typical types of accounts that I create in context are checking, sometimes an associated savings account. You create them separately in Quicken. Very often making one or more credit card accounts. I almost always create a cash account, even if the client doesn't keep petty cash. If we have time, I'll explain why. And I also almost always create what I call a pseudo account because clients are often never perfectly disciplined. They'll sometimes tell me, oh, by the way, I bought lunch with a client and I used my personal credit card, which of course I'm not tracking, but I got to put that somewhere. And I suppose I could put it in the cash account, but I like to have a sort of other account. And in the memo, I'll put paid for with client's personal credit card. But I'll otherwise put in, the date and the restaurant and all that. So that's kind of like a bucket to catch stuff that's nominally outside the sandbox, so to speak. Okay, so a little terminology. The account is Citizens, but this is called the register window. Yes, you could call it the account window, but this is the register. It's supposed to mirror a paper register. Does that make sense? Okay, so then each dual pair of rows here is a transaction. And a transaction in general has, a date. In the case of a checking account, there might be a check number, the payee or payer, the expense amount or the deposit amount, a category, which we'll get to, and an optional memo, to explain more, usually to yourself, what the hell is this?
Yep. I just want, in keeping with the terminology of calling this a register, I want to note that the people who made Quicken had a real psychological challenge when they created this program originally. None of the original Quicken users had ever done computerized bookkeeping before. And so it was a really key design goal of the man who designed Quicken to make it look like that paper register that you use with your checkbook. And that stayed the same all these years. It's been really a key part, I think, a very key part of Quicken's success. And so when looking at this and using the word register, I find it really helpful to remember that lovely thing that we got with our checks, because that's exactly what this is supposed to imitate.
Right, and there's some minor differences. In some paper check registers, the check number comes before the date. So you got to be a little careful if you're a very literal typist to pay attention to what's on the screen. And these little italic labels here are to remind you, because there's no room, I mean, they're column titles here, but you might be down here and not look up. So these are here to remind you which column you're in. So I'm going to just briefly enter a few sample transactions here. And there's all kinds of keyboard shortcuts I could be showing you, but I'm going to, for the interest of time, I'm going to just blow through this. And you'll notice Quicken, I'm not capitalizing myself. Quicken naturally capitalizes for me, which can be irritating sometimes and really helpful other times. So far I'm on fields where I can type in within limits what I want. But when I get to the category field, the category for a transaction is a super big deal. This determines which bucket, which tracking, which row on the reports this transaction will feed in the future. So you will spend a lot of time thinking about categories. So right now, as I told you, there's no categories in this file. So I just typed in a business concept, meals. By the way, meals and entertainment have been separated in the tax code, so that's another whole tax discussion. But that category does not exist. So when I hit Tab to move on from this field, Quicken says, hey, I don't have that. Shall I make it? So this is one way to create a category. You type it on the fly, and then Quicken makes it. And I always prompt, because this is not the greatest way to make categories, because if you already had a category called dining, now you've made a category with an overlapping concept, which is not a good idea. So I have a more organized approach to categories, but we're doing this on the fly for the moment. So I'm going to say yes, and then it asks me a few more things about this category, which I'm just going to just approve right now. Just notice it observed that I'm doing a payment here, so it assumes it's an expense category. And then it lets me move on to the next field. And then here's the memo, which is optional, but I'm pretty obsessive. So I recommend, at least in the short term, document stuff, because 5 years from now, you'll be looking back at this and going, what do we do at Bertucci's? But level of detail, obsessiveness, up to the bookkeeper. So when I finished this transaction, I'm going to hit enter on the keyboard, or I can hit enter on the screen. And let me know if you can hear this little noise. Can you hear that? Did you hear nothing?
No.
Okay. I never know if my sound is going across. Quicken makes a little cash register ka-ching noise when you enter a transaction, unless your sound is off and you turn those off. I personally feel ka-ching should be reserved for deposits and ouch should be for expenses, but they didn't ask me when I saw it. Anyway, so just briefly, categories are an abstraction. They're an abstract concept for what bucket does this expense or income go in. In Quicken, a category is either an income category or an expense category, or it's a transfer. Categories are hierarchical. If I have a top-level category like business expenses or client income, I can make subcategories. So under business expenses, I often make stuff like parking, supplies, postage. And under client income, you might have Smith and Jones and Brown, to distinguish your clients. It's totally up to you. And you can actually go 16 levels deep. I've never had to go more than 3 or 4. But subcategories are often what you're working with here. We'll come to that in a moment. But the core thing about categories is that they need to be unambiguous. You don't want, I do have a miscellaneous category, but I try almost never to use it, reserve it only for rare, unique things, and I document the heck out of them with memos. I like categories to be very specific, and so thus, as you develop a category list, you might want to keep it printed out and handy, so you don't create another one that's an overlapping concept. If you already have charity, you don't want charitable. If you already have car, you don't want auto. One great way to start is look at your Schedule C from your tax return. That's a good way to get started with categories. And especially if your accountant does your taxes, in the last section of Schedule C under other expenses, they often stuff in more stuff that's beyond what the IRS lays out. helpful stuff, helpful stuff. Okay, categories are also implicitly listed alphabetically. You cannot change that, but you can force it. You can, stick little prefixes or A, B, and C or numbers to force them in order. Another reason to keep a printout handy. And common categories on the income side, you might have client income. If you rent property, rental income, you may have a rare bank that pays you interest. Typical business expenses are supplies, parking, tolls, computer equipment, which you should keep separate from computer software, bank fees. Typical personal income might be salary, interest earned, federal tax refund. Typical personal expenses might include estimated tax payments, final payments on your taxes, charitable contributions. And then there's level of detail. Do you put all your telephone stuff under one telephone category, or do you separate cell phone from landline? You separate cell phone equipment from cell phone accessories from cell phone service. I recommend that because services and equipment are different things. You will never make a perfect list on day one, much less a complete one. After your first year's worth of bookkeeping, you have a pretty good category list because you've been through a year's worth of stuff. It will still be evolving to this day. And you may at some point decide to split something, which means you have to go back through all those transactions. Okay, so, some finer points. There is no undo function except for minor text editing. When that transaction goes in, it's in. If you delete a transaction, it's gone. You delete a category, any transaction using it has now become uncategorized. You delete an account, all of the transactions in it are gone. Back up frequently. I try to back up every 20 minutes. I try to back up before I change horses in my mental thinking, before I download something. Back up, back up, back up. There's no save function. When you hit enter, it's in. So the upside is, if the program crashes or you get a power failure, all you're going to lose is whatever transaction you're entering from scratch or whatever transaction you're editing. It's a database. It saves as it goes. Okay, so briefly, a couple more transactions. And I have a rhyme and reason for this. So this is, again, the fictitious person with a business. So one of the cool things about Quicken is that what I entered here was what I call a simple transaction. I'm now going to make what's called a split transaction because what I bought at Staples spans more than one category. And it's ridiculous to type in separate transactions when your credit card company or your bank and your check is going to treat this as one transaction. So I'm going to click the split button here, and there are keyboard shortcuts for a lot of this. And so now I get a little kind of a ledger that breaks down this transaction into rows of 3 pieces: category, memo, and amount, because those are the things that you might be chopping this up into. So in this particular Staples visit, I bought supplies, or one chunk I bought is supplies. And again, I'm going to create these as I go. So I'm hitting tab, and I'm going to say yes to supplies, and it's an expense category. I'm going to make a note that it was envelopes. You could get into all kinds of detail here. And let's say it was $5.47. Because I'm obsessive, I also will note the sales tax that applies to that item, because I don't want to have a separate sales tax category that's generic. And since I'm buying different things, the sales tax should go in the right category. Welcome to the world of bookkeeping. This is part of the obsessive nature of being a bookkeeper. Okay, so next up, I bought stuff that would apply as a client gift. This would be a gift certificate for $100. And notice as I go, I typed in the total to start with, and Quicken is showing me what's left to explain, which is a great feature. Oh, and by the way, I can go up here and do copy and then do paste. And as it happens, that's the 6.25% of $100, my fictitious tax on the gift certificate. And now the remainder down here is 0. So I have explained the whole thing. So I close the split doing this, I hit enter over there, and now my split has been entered. And like everything else, if I come back here and hit split again, I can go back and modify that. So that's...
May I ask you a question?
Yes.
So the sales tax especially if this is a business thing, goes into a different kind of category later.
Slow down, slow down. This is sales tax paid on expenses. This is not a product business where we're charging sales tax to the customer.
I understand that, but so this is basically, you don't really need to later separate it out and figure out how much sales tax did I spend this year.
Oh, no, yeah, yes, I could have just combined these two rows together and these two rows together. That's $5.81, and that's $106.25. So I could have just had 2 rows, not 4 rows. But no, there is no investigating sales tax later. I don't think it's a relevant thing for the high-level bookkeeping, unless you want to somehow get some sort of sales tax rebate.
Thank you.
But yes, if this were a product business, we're charging the client sales tax. It's a whole nother kettle of fish, which I'm thankfully never getting involved in. So this would be like reading off of a receipt. But on the receipt, they may have combined these 2 sales tax numbers. So yes, as the bookkeeper, I would either break the receipt sales tax down and assign it to the envelopes and add it together, or it's actually less typing for me to do this, because that way you can say, yes, it was a $100 gift certificate, and by the way, there was sales tax. So to me, this makes more sense, but your bookkeeper may do this differently. But what you don't want to do is pick one category to straddle these 2 concepts. That's just nuts, because now you can't keep track of what you spend on supplies versus gifts, and you're not going to make a supplies plus gifts category. Don't go there. So the main purpose of a split is to separate disparate concepts, because there might have been some personal stuff here. There might have been equipment. There might have been a refund or a coupon. The purpose of a split is to let you do this level of detail. Whether you dig down to my level is a secondary consideration. Does that make sense? Okay, so quick examples. I'm now going to do an equivalent on the deposit side. So here's a simple deposit. Here's a client. Now I have to tab through the payment column to get to the deposit column, because most often you're doing payments. So if you're a touch typist, you got to remember that. So here's a client paying us. And I'm going to use a very simple category to track that. And so again, new category, could have created this in advance, and it noticed it was income, so that's what it suggests. And then here I might write, the invoice number, and I might write a very simple description of the thing. I might open a split and go into more detail. But this is a simple deposit. And then similarly, we might have a complex deposit. So here's checks from various clients. And here I'm going to put the total in advance, and then I'm going to go into the split. So notice this, I'm intending to type client income, and it recognizes, oh, you got a category that starts with CL. Is that what you want? And guess what? It is. So I don't have to type the whole thing. And then here I might document, which client it is, or I could make subcategories of that with the actual client names. I recommend last name first. And again, I might say the invoice or the dates, but basically this client paid us that much. This client, and notice the remainder to be explained is being tracked here. And then here we have something personal. So there's a business concept called owner draw. This is like a personal concept. I can explain this more if we have time, but this basically says, and actually that's technically usually an expense. So here's, Uncle Barry gave us a Christmas gift. So that happened to go in with this deposit. Like I said, clients almost always mix business and personal. I've never yet met one who's so disciplined. It was purely business and never anything personal. And see, now everything's explained. So I say that, I hit that, and poof, we now have a split deposit. So at lightning speed, here are the basic 4 kinds of transactions you tend to do: a simple expense, a split expense, a simple deposit, a complex deposit. And one of the bugaboos of a bookkeeper is on the bank statement, it might just say deposit $1,800, and you have no freaking idea what was in that deposit. Some online banking systems now will let you dissect that, but many won't. So you're back to the client saying, what was in that deposit? And by the way, could you start documenting them for me so I don't have to bug you about it? And some clients will, some clients won't. Okay, so now that we've done this much, I'm going to open up the list of categories. And you'll see these are the categories we've created so far. By default, they're in alphabetical order, and see some, you tend to have fewer income than expense categories. But this is going to be a mess if we keep going this way, because this is starting to mix business and personal, and some of these should be grouped. So I could do the surgery here to show you how I do that, but instead, back to the Julia Child School of presenting here, I'm going to close this starter file and then show you how this file could have evolved. Oh, and by the way, when I close, Quicken kindly says, do you want to back this file up? So I'm just going to skip that for now. And now I'm going to open, and by the way, it's prompting me for a password. I'm just going to show you that there. It really loves my internal monitor. So now we're basically in that same file with those same transactions. And now I have additional accounts. But let me just get back to that category list and show you what I've done over time to that category list. So I've basically created two parent categories that are you never use by themselves, but are good grouping things. So, and I abbreviate a lot. So I call this, it's shortened from business expenses. So I created a parent category called business expenses. It's an expense category. And then these are the subcategories. And you may recognize supplies and gifts that we did raw loose before. And then I also tend to make a top level personal expense category. And you'll recognize draw under here. And you'll see here, I actually went 3 levels deep. So here's the beginning of a useful category hierarchy. So what I recommend is for brainstorming purposes, just go at it. Pencil and paper, Word file, whatever, just throw stuff at the wall. You know, what are the things you naturally will be tracking in your business and your personal life? You know, there's all kinds of business expenses we can get into. Supplies, parking, tolls, bank fees, etc. You know, subscriptions like Zoom, software, hardware. You know, start out with those, you know, but I recommend making a parent category something like business expenses, or you might call this the name of your business. You know, Gilbert Consulting, whatever appeals to you. And then I similarly recommend grouping the personal stuff together if they're in the same Quicken file. At a minimum, you're going to have draw, probably some taxes, and probably some charitable stuff. And then on the income side, since people often have such a tiny number of income categories, these I just left loose, so to speak, client income, and just a nod to the personal world. You might have an income category called salary. But again, if I need to, I'll make a BUS INC, short for business income, not incorporated, and put business stuff under that. Because maybe you have multiple sources of business income, or that's where you put the client names, or maybe you do consulting as well as speaking. You know, it will evolve over time. And you can move categories around and everything will adjust beautifully behind the scenes. There's everything coordinates. It's a live database. You can rename categories. So this is kind of the basic structure that I do for most clients. I tend to keep the income stuff loose because grouping them is pretty rare, but I always group expenses on the business and personal stuff. And if somebody has a property, you know, 50 Main Street, that might be another parent category with subcategories for its income and expenses. And lastly, down here, you'll notice there's 6 categories with square brackets around them. These are the transfer categories. They precisely match the list of accounts over here on the left. So if I were entering a transfer, and I'll show you, from one account to another, I would use these special categories, which are neither income nor expense, because they move money straight over from one account to another. They're money from one pocket to another. So technically for cash flow purposes, and that's the overall mission here, they're a net zero. Money left this account and landed on that account. If it left an account and landed nowhere else, that's an expense. If it dropped in out of the sky, that's income. So that's my quick, metaphor for bookkeeping here. So so I'm going to click back on that citizens account, and you'll see the same stuff I entered before, plus some other, other stuff I've entered since to demonstrate all this. And in fact, we have to scroll here because there's a few more transactions that fit on the screen. So there was that opening balance, and then here's the activity since then. And notice I picked a period that straddles January 1st. This pretend account statements go from the 23rd of the month to roughly the 23rd of the month. So here's the opening balance for that moment. And then, you know, we got money from John Smith. We made an ATM withdrawal, which is a transfer to cash. And that's a convention that I use. Here was that deposit. We paid some estimated taxes before the end of the year, very tidy. Last day of the year, you may remember we went to Bertucci's. Early in the year, we paid some health insurance. Oh, another client paid us single check deposit. We paid down a credit card bill, transfer to the credit card account. All the details of the charges are over in that account. We had to void a check, rare use of miscellaneous. Here's that split of staples that we did. Oh, and this bank charges us a monthly fee, so that's a bank fee. And look, I took some money home, so to speak. I paid myself some owner distribution, which is not a taxable concept, thus it's a personal expense. Oh, and I made a note to myself in the future, thus the purple line. I document my accounts this way using a $0 transaction in the future, just to remind myself I can reconcile this and it's my main checking. So I'm accelerating here because we're running out of time. So just very briefly, here's another checking account that I made. I called it the personal account, and here's some personal activity. Here's my miscellaneous bucket account where I put in stuff that were, you know, here's an accidentally used my personal credit card. Oh, and here's a check from a client that I deposited into some other account, you know, for my own reasons. But sole proprietor, no boundaries, you can do whatever you feel like. If this were a corporation, that's a big no-no. And here's some notes. This is my random bucket account. I can't reconcile this because it's random stuff. Here's a corresponding savings account, which I'll skip for the moment. And here's a credit card account. So again, it has an opening negative balance, and then mostly charges with the occasional payment came over, transfer from the checking account, and then more expenses, some of which were more complicated. For example, at Amazon, I bought a variety of things. I bought some software, I bought something personal, vitamins, I bought some business supplies. A split is the perfect thing to explain this Amazon purchase. This got me free shipping because $25 was the threshold. Oh, and then you'll notice New York Times Digital hits me at the end of the month. That's an ongoing subscription. So I put that under subscriptions. Are people with me so far? I realize I'm kind of sprinting here.
Yes.
Okay, so last very quick thing. A big deal in bookkeeping is called reconciliation. Did this stuff actually happen in the real world? And does what I typed or downloaded into Quicken match what my bank statement or credit card statement actually says? I call this tacking down the carpet. It's an imperfect but really helpful process. So if I want to reconcile a statement in my bank account, obviously you can't do them out of order. So since this previous statement was December 23rd, I'm going to pretend the next statement was January 23rd, which kind of goes through here, so it would not include this check that I wrote on the 31st. So you start the reconciliation process going, and this better match your statement. If that opening balance doesn't match my paper statement, I bet I got to stop here and call my bookkeeper because that's screwed up. It happens to have what I typed in an earlier session, but normally that would be blank. So give me 1 second. Right, so I typed this in from the statement in my hand or that I downloaded. So and this basically matches, the terminology may vary, but this matches my statement. So I hit OK to start the process. And then I get a wonderful window that all I have to do is click in and it does all the arithmetic, which I love. So, so looking at my statement, I will say, yep, I saw that check clear. The bank doesn't know this, but I know that I voided that check. So that's not on the statement. So I check that off. And then see these numbers down here are adjusting as I go. And then basically I might, those checks cleared as well. And then I might work through the rest of the debits. So that one cleared. I know I went to Bertucci's, I typed it in, but it's not on the statement. So I'm going to skip that for the moment. There's my health insurance, there's my credit card payment, there's my statement fee, and that's up to the 23rd. And then, oh yes, over in the deposit section, all three of the, oh, sorry, just that first deposit is sorry, and that deposit are all on that statement. Well, in the interest of time, had this gone one way I planned, I would have said, gosh, I guess Bertucci never charged me, lucky me, and the difference would have been 0, then I hit finish. But I'm afraid something is going wrong here in my demo. And
I just want to note that in my experience with these programs, Quicken, QuickBooks, any good accounting program, this is the heartbreak of using the program. Is when.
Oh no, I've never had this problem. So just bear with me. I'm going to use some magic here, and so no, I don't believe in heartbreak. I believe in good bookkeeping.
I'm saying for those of us who don't have your skills, a lot of people, when they use these programs without having the skills that you have and experience that you have, experience a lot of heartbreak about the reconciliation part. That's been my experience.
Well, yes, but in every case, that in my experience, that has always been because whoever did the reconciliation before you took an adjustment or screwed something up. I have never had a problem with reconciliation. So anyway,
the note I wanted to make is that many customers use Quicken or QuickBooks without being skilled bookkeepers. And my experience is that often they end up with something being screwed up and they'll throw in an adjusting entry and just kind of get on with their life.
Oh, right, and I find that unacceptable. So I don't suffer that. If I'm taking over a Quicken file from somebody else, I may shove in an adjustment to bring their balance up to what it should be. But apart from that, I never surrender when I'm in the middle of stuff to do an adjustment. Anyway, so something is screwed up in my demo here, which I'm not going to get into because we're running out of time. But basically, when you see these little C's here in this column, that means that they're in progress. But when you have a successful reconciliation, they all turn into capital R's. And that's a confidence building thing. But you can also make a mistake during reconciliation. If I have 2 different expenses for the same amount, I may check off the wrong one. And that's on me. So anyway, apologies for demo gone sideways here. So I just want to briefly leap into reports here, and that's kind of my final part. So I've already made some reports here. So this is part of the payoff of Quicken. This is obviously incomplete data for this client, but this is a year-to-date report. So this is ignoring that chunk of December. This is going from January 1st through today. And of course, we both know there's not there's not data for every one of those months. But here's what's in Quicken so far. On the income side, here's this stuff with its subtotal. On the expense side, exactly matching my category list with subtotals for subcategories. Here's all the expenses. Here's the subtotal for expense, and then here is the net of income minus expense for this period. So this is a typical payoff. Here's what the cash flow looks like year to date. This is often called a profit and loss report as well. And I always create one of these reports, and I always make a companion detail report. I don't tend to make these during the year, but at the end of the year, bear with me while I try to make this the right size for the screen. So here is the companion detail report, which shows every transaction if I got the criteria the same on the 2 reports, should exactly match. I can't put them side by side here, but these subtotals on the detail report exactly match the row totals on the category report, on the summary report. So in essence, this explains this in more detail. So I tend to supply those at the end of the year to the client and the accountant. And the client may also ask me, for additional reports, and again, this is incomplete for the data, but just to show you, here's a typical thing clients ask me for, a comparison report. Here's nominally all of last year versus all of this year. And obviously our data is very minimal here, but here's a bird's eye comparison of the 2 years. It's pretty crappy because we have minimal data in here, but here's what a comparison looks like. And here was the same net at the bottom, and then here's the 2 years added together. And I have some clients that have been doing this for 12, 15 years. So when you get to 12, 15 columns, the type gets really small. So that's the payoff of Quicken, is one of the payoffs is reports. And then these I would print into a PDF and then email to the client. And these are live. I can double click on this and get a kind of ad hoc detail to say, explain me that number, explain me that number, which has 3 pieces. So we're just about out of time. There's tons more I can tell you, but those are the nuts and bolts. Other things are, how often does the bookkeeping get done? What's the annual schedule look like? We can dig into more features, but that's a quick sprint through Quicken.
Martin, thank you so much for the sprint. What I'd like to do is open the floor up and see if people have some questions. Probably the best thing to do is to raise your hand, and I'll see you.
But I just want to answer Sharice's question. So she asks, what are these different file types? Well, I call these little flocks. This Quicken file, which we're in right now, basically has these 4 pieces. That's purely a function of this version of Quicken. The main guy you double click on, if you're so inclined, is this first guy who gets the icon. These other ones are tiny little vestiges of things that might never get used, but they got to be here. I believe this one is the price history if you're tracking investments. I'm not sure what the other guys are, but you got to have all 4. Don't delete them. But if you're going to move them around, you got to move all 4 together. You can zip them all together and back them up or send them to somebody, but they travel together. If you rename one, you better rename all 4. And there's a rename function in Quicken which will do the 4 for you together. Other versions of Quicken have 5 files. Others might even collapse them into 1. It's a quirk of Quicken. QuickBooks tends to make everything into 1 file with other wacky exceptions.
So I would just note, for those of us who are supporting customers who are using Quicken or QuickBooks, but now in talking about Quicken, this is one of the real areas where people often get extremely confused in my field experience. People are very confused about where their Quicken files actually are, which folder they're actually in. They'll often have a whole bunch of these floating around in all these different places. So in my opinion, one of the first things you need to do with a customer who's using one of these programs is to identify clearly where the data files that they're actually using actually are, and take all the other ones and hide them someplace so that they don't get confused, and then back up the ones that are real very, very carefully.
And toward that end, one of the things to be super careful about, if you're making a new Quicken file, you can obviously choose where it goes. But there are older versions of Quicken that would create the Quicken file in the Quicken program folder, because that's the way you did things back in DOS. So you can certainly search the client's hard drive for star.qdf. Another cool thing is if you just launch Quicken, not choosing a file, and you land in the file, you nominally have no idea where this is, but if you pull in the file menu, it's listed right here with its full path. And then these, in fact, are other Quicken files, up to 4, that have been opened in this recent order listed. So the first thing I do is look right here and say, oh, that's where your Quicken file is, and here's other ones. This one, the second one, number 2, might have been opened 5 years ago. But just opening the program goes to the INI file, which tells it which file to open. It opened most recently. And this starts to give you a clue as to where the files are. But yeah, it can be a real mess. People often open the backup file and start editing that, and then they go back to the main file, start editing that. People can make an incredible mess. They're civilians. They're not computer people. They're not bookkeepers.
Did you have a follow-up question?
Yeah. regarding the categories, I follow the IRS standard at the encouragement of my accountant.
Good.
But it doesn't categories, and it looks like Martin has pretty much all of them in his.
Well, actually, this is about a third of the categories that I normally use.
Because you know, I didn't want my accountant coming to me. Well, what's this category? Where do I put it on the tax form?
Well, or you might have multiple categories that need to be added together, or God help you, separated for your tax form. You know, stuff doesn't work.
Yeah, it just makes things way too complicated.
Well, some people confuse categories with vendors. I sometimes find a staples category here. You know, well, that could be equipment, that could be supplies. You know, it's a real mess dealing with a civilian's file. The cleanest approach is if I can start from scratch. Or call what I need to call, but seriously, start from scratch. If I have ancient data that I have to host, I'll make another parent category called old and shove the crappy categories under there, and then have a convention where I started, let's say, January 1st, 2020. Through 2019 is the old stuff with the old categories, which shoved under a pseudo parent. And then in a sense, I'm starting fresh, you know, on that date. But for historical reasons, I wanted to keep the data in there. But the best approach is brand new file, you know, brand new bookkeeping. Because often I'm getting people who basically have either used Excel or never really done serious bookkeeping before. They've somehow done back of the envelope. I never get anybody when they started their business that day, but I usually get somebody who's finally is mature enough and the person is mature enough to actually get a bookkeeper rolling.
Well, I found this really helpful. I find this program intimidating, but I really like the idea. It's sort of like a Rolodex for your money. Seems like there's a place for everything, and I like your extremely hopeful and optimistic implication that some of us might never have to do a crazy adjusting entry. I find that heartening.
Well, it all starts with, was the previous reconcile done correctly or adjusted? So when I'm taking over someone's file and I want to, if I'm doing 2020 bookkeeping, on December 31st of 2019, like right over the hill where I won't see it in my reports, I'll put in, you know, whatever adjustment it takes, you know, to make, for example, the running bank balance match an actual statement. And I might have to shove that back even further to find the statement edge. But that's the most I'll do, a sort of a opening salvo adjustment, a sanity, because I'm no way I'm going back to the start of the account, which might have been 5 or 10 years ago.
Sharice, did you have a follow-up question?
Yeah. This would be really useful because what I found in the bank statements or online is I'll make a deposit to cover an expense. However, the deposit doesn't show up until after the expense, and it can kind of get confusing, especially when the bank has one balance in the summary screen and another balance in the actual account. Well, online transactions in the actual account.
Well, the tricky part there is, number one, if you put two things in on the same date in Quicken, you can display by date ordered, you know, by data entry order. But by default, I use the basic date choice, which can sometimes reorder things on the same day. But to get to your actual question, yeah, banks are a little predatory about collecting their fees. So if your balance is low, yeah, many banks I've seen will do expenses first. Now you go negative. Now you have a, you know, whatever they call that fee. And then even on the same day, if you walk down to the bank and handed them cash, yeah, that deposit came later, but thus they still get their fee. That may or may not be, yeah, you know, you don't have to use that bank. But unfortunately, Quicken, it's a little hard to model that exactly.
Yeah.
But when the running balance goes negative, it turns red and has a minus sign in front of it. So if you have a negative balance that is the balance, so to speak, at the end of the day, then you're guaranteed to see it in Quicken. But also, if you're just looking down this column and you see 4 digits become 2 digits become 1 digit, that's a super, you know, visual sign.
Jeff had a question.
Sure.
Yeah, Martin. going all the way back to the beginning, and you were talking back and forth about the different models of charging. And you mentioned yours was hourly. In today's world, what would be the range of rates you'd expect to pay a bookkeeper, going from somebody who's, doing simplistic work all the way to somebody who's somewhat, quite experienced, would you say?
Sorry, I'm not up on bookkeeping rate surveys. You'd have to Google that. Nadine and I have talked about this at length. It probably varies by areas of the country and expertise and situation. I charge the same rate I charge for my computer consulting, which is $90 an hour. And if a client doesn't like that, they don't have to hire me. I mean, that's kind of my blasé attitude. It's not my concern that your previous bookkeeper only charged you $40 an hour. I've seen numbers all over the map. I would be terrified to hire somebody at $10 an hour. I think you have to, kick that around. I mean, I think the core way clients react when I both tell them my rate is to say, well, how much time do you think this will take? In other words, what will this cost me? And, I can do kind of a, thumb to the wind thing. Well, how many bank accounts, how many credit card accounts? But clients can't tell you how many transactions a month that they charge. No way, they just don't have that concept. And that doesn't exactly relate to the time anyway. If I download 300 transactions, I can be super efficient. If I type each one in, that's not very efficient. If out of 300 transactions, there's 250 questions, that's less efficient, but it's necessary. So I tend to look back over my clients and say, okay, this guy I know has one bank account and 2 credit cards, and he takes me an hour and a half a month. So, but this other person who might have the same number of accounts in his credit card account, he charges, 300 transactions a month, whereas that first guy might have 20. So it's not just, so it's complicated. I think the fairer way to ask is have a conversation, hopefully it's free, and describe your situation as best you can. And then talk with the bookkeeper about how they work. And then come up with a dollar estimate, a cost estimate, not an hourly estimate. It's like, you want a new kitchen, give me an estimate for the kitchen, not for the hourly rate. But it's complicated. And I don't have a good answer for you.
Oh, thanks.
Yeah. But it's not, it's not just the hourly rate. It's the person's experience, integrity, follow through. Do you like them?
I understand. That's why I said, what's the range?
Yeah.
Yep.
And there's a growing number of bookkeepers I hear about who are charging fixed price or other approaches. Some clients, I make them pay me in advance because they take a year to pay me. So I finally got fed up a few years ago. And for them, pay me in advance or you're on hold. And they accepted that and they do that, which is like, wow, it worked. Other clients, they pay me in arrears. But if they get more than 2 or 3 months behind, I notify them I'm putting your bookkeeping on hold because you're already into me for 2 or 3 months and I'm not going to go farther out on the hook for that. And they wake up, write me a check, and then we're back in business. So that's all the stuff that should go into a contract, to Teresa's question earlier. But I don't tend to bring that stuff up unless it comes up, because that can be a little daunting to a brand new person who's like, what? But other policies as a consultant, kick in to be fair to me and also fair to the client. Does that help?
I find that helpful. I think that this question about billing is one that comes up in this group very frequently. It's a very complicated, challenging question. We want to get paid for our work, but we also want to be affordable. We want to be somehow predictable. And even bookkeeping, which in some ways we think would be very predictable after a while, it turns out to be much more complicated than that. And so I think the key, just the larger answer to Jeff's question is what you're saying, Martin, which is the key to it is the relationship. The key to it is having some kind of flow and some kind of mutual understanding about what's going on. And it's also one of these situations where you can change bookkeepers. I would add that the question about integrity is one that is really important not to underestimate. That in my experience, small businesses have really serious embezzlement problems. It's very frequent, very common. The bookkeeper can either be a help for that or a cause of it. I've known one case of that. A really good bookkeeper is somebody who's going to protect you from that. by noticing when something's awry. And so finding, if you are going to have someone else besides yourself do your bookkeeping, finding someone who has a really good reputation for both integrity and knowing when something's fishy, I think would be really important.
Another way to look at the cost is that not only does, let's say I'm doing monthly, you know, August might be a lighter month because they're on vacation than February or September when, you know, they're back at work. But different times of year may have also different levels of effort. In January, that's when 1099s are due to be filed. So I have an extra round for most of my clients to figure out to whom to whom may they issue 1099s, depending on all the complicated 1099 factors. That's a little extra work in January. I don't touch end of year until February because December 31st, things aren't done yet. Sometimes direct deposits hit on January 2nd that belong in December because of their taxability. Sometimes weird things happen in December that are explained in February, you know, holdbacks or reimbursements or whatever, or murky stuff that doesn't get explained, or the client is just unavailable for questions. So I don't even begin end of year until February. And sometimes clients don't get to me until October or July in this case, this year. So end of year can be an extra effort to make sure that there are 12 of these charges or 24 of those charges or, you know, whatever. I mean, there's all kinds of things one can review at end of year. So it's lumpy. You know, it's not like it's always 50 transactions every month and there's no questions. And even for clients like that original one I'm still working with today, he's still, yeah, I'll ask him a question, you know, is this, and I've learned not to say, is it business or personal, this payment or this deposit? I've learned to be more specific because he'll just say business. And I'm like, oh crap, I forgot. Now we got to get into, is it business parking or business meal or business hotel? So I've learned to prompt, you know, is this a business meal or a business gift? You know, I rattle off the obvious possibilities and I always add, or is it personal? And God help me, even 2 days ago, he came back with, it's business. It's like, all right, count to 10. It's like saying, do you want A or B? And the person answers yes, you know. And, you know, I've been doing this bookkeeping since '99. He still doesn't get it. Or maybe he's distracted or reading off a small screen. I try to be patient.
Sherry, another question?
Sure.
Therese?
Yeah, regarding the cost, I understand that in some cases it can be predictable. You have a client that has, you know, within a range, small range, a given number of transactions on a monthly basis. But, and I know this from my own experience, you run into a transaction or some combination of transactions that go sideways. And I literally have to engage in forensic accounting to figure out what happened.
Well, Sharice, let me pause you right there. Only a portion of the work is proportional to the number of transactions, not all of the work. In a sense, the data entry is somewhat proportional, but I have a mass import approach, which can even make that approach a constant. So it is very tricky and dangerous to get into 50 transactions a month costs X dollars or X time. That's really unpredictable. And like you said, this one transaction might take me an hour to figure out, or 10 minutes, I mark it as a question, and then 2 weeks of chasing the client to get an answer. And what do I charge for that? So, but there's more than that, because sometimes one transaction can spawn a whole bunch of other issues. Like if a client gets double charged for something, and maybe if it's a $5 thing, they don't care, but I always point it out. Maybe it's a $500 thing and they do care. Well, that gets marked. I might have a special way of marking things for follow-up. You know, this should get reimbursed. Well, what if that drags on for months and I got to remind the client? Or what if they get over reimbursed? Or, you know, what if they're holding back some expense, that some income that gets given back to them later? That might need a new category. I mean, there's ripples and ripples in the pond here. So it's complicated. And this is why I think it's important to do bookkeeping reasonably frequently, so that stuff is hopefully somewhat fresh in the client's mind. I got one guy who's, after years, he said to me, can we do this once a year? And it's like, okay, let me think about that. And that's an ongoing conversation. So there is a certain economy of scale. I have some clients who have me do quarterly, and that's a little more efficient than doing monthly. But I can't tell you the percentage. You know, is that 20% more efficient? Is it 25% more efficient? That's really hard to say. It all depends on what statement periods ended during those 3 calendar months. It might be 3 periods, it might be 4 periods, it might be 2 periods. So And if I have a pile of questions and they don't get answered until the next quarter, well, that might be a lighter bookkeeping invoice. And then the next quarter is a heavier one because we got questions from the previous quarter and questions from this quarter. So the size of the bill can be all over the place. So it is really complicated to get into a level, unless you want to do level billing, which is a whole different ballgame. It is awkward and kooky. And I got some clients who don't ever complain about the size of the bill, and I do my damnedest to be fair. I even knock off time if I felt I was spinning my wheels. And other clients who are like, if it was 1 penny difference, they're all over me, So I've gotten to the point where when I email an invoice, I might add in the comments in the email to say, this month was a lighter month because of this and this, which didn't happen. Or this was a heavier month because we dealt with end of year and 1099s, and there were some complicated, questions about this or that client thing. I don't put numbers next to them. But just so you know, I've had a few clients grouse so much. I actually track the time in my notes. I put the end time for every task I do in my notes as I work.
Yeah.
And that has paid off because I had clients who were such nasty grousers. I put together a timesheet. I broke my time down by the minute. And
you're a factory worker, Martin.
I didn't charge them, obviously, for this defense against my invoicing, but I could explain it down to the minute. And they eventually backed off. But you got it. That's another issue. And there's nothing wrong with asking, why was this period longer than that period? A bookkeeper should be able to answer that. But don't expect, like I said, yes, as I get to know somebody, I ask fewer questions because I see patterns. But another time-saving thing is, should I assume all restaurants on this business credit card are always business meals? Some clients will say, yeah, and maybe that's true, maybe it isn't, but I now write down the date they told me that, so they can't tell me they didn't tell me that later. And that saves time. It narrows those questions down to, what the heck was this? Was this a restaurant? As opposed to, Joe's Diner. I can tell it's a restaurant. So there are some time-saving things, but it's awkward to assume anything is, nicely proportioned. It's an appealing engineering idea. It doesn't work in reality.
I just want to say, it's 9 o'clock. It's probably a good time. We've been working hard. Martin, I really appreciate your sharing this with us. I found it really, really helpful.